Okay, welcome back. I'm back. I was off on Friday. Haven't put out a video for a little while, so we're going to start out with the stock market technical analysis, guys. I'm going to point out everything I'm seeing in the charts. We're going to start out with general market analysis, and then I'm going to start going into some of these individual trade ideas that I've talked about over the last few weeks. Really check in on those, see how those are doing, and we'll wrap up. So if you guys, again, if you're new and you find value in these videos that I put time and my energy into, then leave me a thumbs up. That's kind of the minimum that you could do. I do appreciate that. Leave a comment below of any stock charts you want me to look at, and I do scan those comments. So if I see something interesting, I'll point it out in a future video. And if you're interested in learning about technical analysis, how to use the charts to really read where the stock has the probability of going in the future, take my course, link in the description below. All right, we're going to start out with triple Qs. Again, here's what I'm tracking off of on the Qs. This is a daily chart. Again, we use log scaling for everything. That's really critical, is to use log scaling. You'll get a more accurate depiction of chart movement. This is your March 2020 lows here, and you can see we've been uptrending along here. We had a sell signal on the triple Qs back on what, May 10th, and then we've been back testing ever since. So I am obviously it looks pretty obvious now that the Qs wants to back test and put in this new marginal high. Let's see if we've got it there today. We kind of made an equal high, almost a new high, a little bit higher. Maybe it comes tomorrow. And we will have negative divergence, continuation of negative divergence. What does that mean? Well, that means we're going to make a new high, a new all-time high, somewhere in this area, potentially back test this trend line here in the future, a little bit higher up. And really, you know, if you think about it, it's about another 2% or so up to the upside. And if we do that anytime soon, that's going to be a new marginal high in price. And down here on the momentum indicators, it will be a lower low in momentum. So it will be a negative divergent high, backtesting into major resistance. This is a critical area where I'm interested in shorting tech. Again, looking for a little bit more upside before I start establishing a short position. But, you know, again, that negative divergence tells me that we're likely going to, you know, move a little higher and then fail and roll down from there. So that's really what I see on that one. Let's look at the S&P 500. So the S&P 500 coming off the March 2020 lows, you can see that basically we were uptrending. Here's the green line there. We had a sell signal or a breakdown of trend, and we've basically just been backtesting for a little while and just drifting sideways, not going up a lot, not really going down, just kind of drifting sideways. So one thing is, you know, we obviously can go higher. We have put in a new high in the SPY. So this price action right here is divergence, negative divergence, meaning price is making new highs while momentum is clearly dropping off. See that momentum just dropping off right there on the RSI and the PPO? Negative divergence. Look at the RSI. It's turning down right here as well. So if I kind of just mark that out, let me kind of redraw that. Just in the short term, you can see negative divergence there in the RSI while making a new high in price. All right, negative divergence is often an indicator that a trend reversal is likely. So what's going to be our catalyst? Likely going to be the Fed. I think the Fed comes out on Wednesday this week. They're meeting right now, today and tomorrow, come out on Wednesday. And, you know, if they don't address the concerns over the inflation, because inflation's coming in pretty hot, and I think it was at 5%. And if they don't address that and just choose to ignore it, well, you know, that could be bullish for the market if they choose to not address it. But if they start to tighten up, get a little more hawkish, the market's going to see that as a negative, that, you know, the free and easy money might start, you know, they might start withdrawing that, and likely you're going to see the market start to sell down. So that's something to watch for. I'll cover that more in detail and how I'm looking to trade it and what the charts look like as we approach Wednesday. Okay, I want to flip into some of these short trade ideas, and we're going to start out here with the financial sector just to take a quick look at XLF. So all of last week and really the week before, I've been talking about financials and industrials as where really the next sector for a good short setup. A lot of these stocks looked weak, and so I want to point that out. Here's your XLF. Here's your uptrend line. Here we created a bearish rising wedge, and we had negative divergence. See the RSI and the PPO creating negative divergence. So you look for the sell signal or break of trend, and there it is. Multiple days of just selling. Today's another day of selling. So this, there's profit taking is taking place right now in the financials, and the short traders are piling in as well. So this continues to move, looks to move lower. Levels of support, I'm going to have to tighten it up. I haven't really been, I've been looking for the break in XLF, but the individual short ideas that I pointed out are really the ones where I'm trying to make money. So SCHW, I pointed that out in a comment, and I've talked about it in videos. This is one that I'm currently short. First level of support is about 68.90. You can see right there, clean level. I think we're selling down to that, and we just continue to move lower. So that's another, 5%, 4.5% down to the downside. That one looks good. And again, this is just the first level of support. Often when you break trend, you're going to trend lower over, weeks, months. You're not always going to just stop at that first level of support, especially after such a pretty strong uptrend. That usually that has to unwind a little bit. So I think we're likely to go lower. Another one is, see these financials. Bank of America here. Bank of America is breaking trend. Clearly broke trend. Here's your uptrend line on Bank of America. This is coming off like November 2020s. And you can see clear breakdown and sell signal. Multiple days of selling. We really broke trend right there, and we haven't looked back since. It's been selling pretty much every day since. Continuing down, the first level of support I see is about 40.25, and I think we're heading straight down to there. And we also have this uptrend line coming off of, this is really the bull market in Bank of America. And you can see we have this uptrend line here. I probably could adjust this slightly, maybe something like, something like right there. But we could, if we break this first level of support about 40.25, I think we're likely heading down to about 37.34. Oh, and that just reminds me, going back to XLF, this would be my target. I have it circled down here for XLF, trading down to about 31 bucks. That's going to come off, that's your bull market trend line in XLF, which started in 2011. You can see, though, we established a trend back then and held it here. We're looking at a daily chart. We held it again right there in 2018. And as I zoom in, the COVID drop broke that trend, and it was resistance. You can see we broke trend, and then it was resistance. Then it held resistance and recovered, held support, and rallied up. So I see us coming back down to that trend line at a minimum. All right, that would be really... That would be a logical place for the buyers to be there waiting to buy the financials. So that's what I'd be looking for, and we'll watch that. Oh, another short is Ally Bank. This one's starting to work, starting to play out. You can see here, here's your uptrend line in Ally coming off of March 2020 on the daily chart. Negative divergence. So as we continued to grind higher, we started to build negative divergence on the RSI and the PPO. Tells us that we're likely due for a break of trend. And you wait for a sell signal. And there was your sell signal right there. Big impulsive breakdown, candle, and broke trend. And we've been trending down ever since. So heading down to the first level of support at about 51.12. We break that. I think we're going all the way down to... this is a good level of support right here. It's about 43, somewhere right in there. So I think we'll likely get a good bounce here at this 43, but I do think we trade down there over the weeks to months. Not going to happen all at once. Okay, let's flip over to some of these industrials. You can see here, clear uptrend line coming off the March 2020 lows. And we were building, just continuing to trend up, but we put in negative divergence right up here. Clear negative divergence on both RSI and PPO on the daily chart. We wait for a break of trend. There's your sell signal right there, break of trend, and all selling since. So since we broke trend, that thing has just been selling down. It's down 2% or so. It looks like it's going lower. We've got some support. I don't have it marked out, but looks like there's some support right about there. at first level support about 101.50, we'll say, in that area. So we'll probably get some buyers stepping in there, and it's going to chop sideways likely for a little while. But I still think we're likely heading much lower on these. Next level support looks to be right about there. And we'll mark that out. And that's about 93.90. So those are our kind of two levels that I'm really going to be watching for right now. I think it's likely we're going to break right through this level. Maybe stall out just sideways for a day or two and then continue lower. Some of these financials, Deere, this one's working really nicely. So John Deere here's your uptrend line. I talked about this for a while, but here's your uptrend line. We put in negative divergence, so that means that the negative divergence really started to show up right there, and then this was a divergent high. This was a clear divergent high. I have it circled there, made a new high in price, a lower high in momentum. So momentum was dropping off while price was continuing higher. And you wait for the break of trend. There's your sell signal, pretty much right there. And since we broke trend, even if you waited till the daily close, Deere is down 11%. Since breaking trend, all right, and since we had that daily close on that sell signal. Next level of support is 3.7. It's about 318. I see a level there, and then another level down here at about 266. That's the levels that I have right now. But so far working. We're likely going to get a bounce here at this 318 area. We might get down there today. We'll see. But this one's working nicely. Moving on, Illinois tool. This one is very similar to Deere. You have coming off the March 2020 lows here. And you have, but the one thing that this one's not as clean is you don't have the negative divergence in the RSI. You do have it in the PPO. So this was a divergent high in the PPO. See it right there, how it's a lower high than previous. Here's your high in price. Here's your high in momentum. Here's a higher high in price and a lower high in momentum. All right. But you never had that same setup in the RSI. So kind of mixed signals. And you can see this one's not selling off quite as much. You also have this level of support right there at about 227.60. So I'd probably want to wait for that to go before shorting this thing. Let's go back. Let's go over to Boyd Gaming, and I don't know where this one falls. It's clearly not it's consumer discretionary, I believe. But again, it's continuing to work. We basically had a clear uptrend line there in Boyd, negative divergence on the RSI and the PPO right there. We wait for the break of trend. There's the break, sell down, back test. I think we're just going to continue to downtrend. I believe we're going to next level of support is right about 55.40. And we've got a very clear level of support right here as well at 50, about 51. So I think we're likely going to head down to that 51 over time. So we'll watch that one. DraftKings, you can see the candles right here. I have an arrow that I marked saying this was the direction I thought DraftKings was going to go. And you can see that we are continuing to move in that direction. Doesn't mean we're going to, always move in that direction, but DraftKings had a clear uptrend line right there on the daily chart. Clear negative divergence on the RSI and the PPO, putting in a topping pattern. We broke trend here, and this was a back test. You can see they also overshot it a little bit, but again, I think we're just back testing and likely going to continue to move lower. And we could back test some more, maybe for a few more days. It doesn't mean that we have to just start moving down right now. But I think ultimately we're heading down to level of support is about 35.47, and then another level down here at 30.76. And if DraftKings wants to get really bad, possibly down to about 18.40, 18.50, that would be a low probability target and likely the final level of support. It's possible it gets down that far. Higher probability to hit these upper targets right there. All right, moving on. NEO's kind of moving higher today. So, I'm going to likely cut my NEO trade. I entered on the short on the sell signal right there. And it is backtesting. But, this is one of those momentum stocks that people just pile into and kind of caution to the wind. And so, you know, if it's not really working and you're not catching the momentum to the downside, maybe it makes sense to cut it, you know, cut it at break even, basically. So I'm likely looking to, you know, exit this one and move on. Because we're back testing. Resistance is about 48.40. So I think, you know, they could pop that a little bit and, you know, could fail there, but you know, there's just better trade setups right now. So why hold on to something that's not quite working as you'd expect? So I'll probably cut that one and move on. Toll Brothers, this one's working out nicely. Now it's just at support, just slightly under. But the thing about Toll Brothers, you've got March 2020 lows right here. Nice clear daily trend line support. Up at the high, we made a divergent high. See the high in price and the lower high in momentum down here. Negative divergence. All right, that tells you that you're likely going to break trend, and then you did. Pretty much that divergent high was all she wrote, and there's your sell signal there. We back tested twice. There's your kickback rally one. Fell down to support. Buyer stepped in, ran it back up to resistance. It got rejected there, fell back down to support. We're at support for the second time, basically. And as I zoom in, you can see we're starting to crack. All right, let's look at the hourly. Support is right about here at 58.35, give or take, you know, a little bit. It could be slightly higher. You know, if I look at this trend line, they might have support right about here. But again, it's just right in this area. And we are starting to crack on the hourly chart. So if we get that hourly close below that support level, I think we're heading straight down to 50, you know, about 50.50, 50.75. And that's a much more major level of support right down there. So I think if we fall down there, we should get a reaction. Now, if we break that, or when we break it potentially, then next level of support's about 40.50. So those are the three levels that I have. I think it's, you know, we could head down to this 40.50 area for sure. But even just to get down to this 50.50, 50.75, that's another what? 13-14%. So from the sell signal, which really came here, if you took it at the end of the day, very good risk reward, and you have a potential gain of about 15% just to this next target. All right, moving on. Let's look at Tesla. Yeah, Tesla's just kind of chopping around sideways. You know, it's moving down, it's hitting resistance and selling off, and I still think we're heading down to 460. I see a broken trend. Let me get my chart back. This was an uptrend, and we also had an uptrend right here. There's your uptrend line. Lots of reactions around that, and there's a nice impulsive sell signal. So I think we're likely just trending down to 460. Lyft. All right, so some of these Cathie Wood ARC stocks are, you know, people are kind of piling into these things again. I'm seeing a lot of these are kind of pumping back up a little bit. Lyft to me looks like it's just back testing. What I did on Thursday morning before I left town was I trimmed half my Lyft position. I saw that it was kind of holding strength, and some of these other stocks were pumping. So I was looking for a back test. We haven't quite gotten there yet, but I am looking for a move up to about 62, 63, you know, 63, somewhere right in there, depending on when we get there. A back test of this. I'm going to add back that half of that position short that I took off. I'm going to reshort that half, all right, up here at the back test. Here's what I like about Lyft. You have an uptrend line right there, clear uptrend line. You have clear negative divergence on the hour side in the PPO. We have a sell signal or a break of that trend line support. Came down, and you know, they stepped in a little early of this support level here at 43.50, and they're running a full back test of that broken trend line. So I'm looking for a little bit higher to reshort it, and then I think and it'll probably come in the form of a gap up. Probably tomorrow morning, maybe it gaps up to here, and likely going to reshort it right there. And I'm looking for that to be, you know, the move that's resistance. I'm looking for it to reject here, and ultimately looking for Lyft to come all the way down to about $32 to gap fill this gap right here. Okay, so that's how I'm playing that one. Here's URI. This is an industrial, United Rentals. This one's working out nicely. You have a clear uptrend line there. We have a divergent high here, divergent high 2, and we wait for a break of trend. There's your sell signal. Nice impulsive breakdown chopped sideways a little bit and continuing down. So selling off more today, and looks like we're going to break this level of support about 303.65, sending us down to the next level of support, 267.35. So likely going to get a reaction down there. Let's see what else we have that's interesting. Southwest Airlines. This one's starting to break. I think we have a sell signal right here. This to me looks like a sell signal. You have a clear uptrend line on Love, and you have big negative divergence on the RSI and the PPO. So you wait for a break of trend, and I think our sell signal came right there. So I think this is an objective short opportunity. It's really not too far away from that trend line break. And, it's about, from where we're at right now, it's about 3.5% or so off of that. First level of support on this, or the support that I can find, looks at about 49.22 or so. So good risk reward, 3.5% potential loss, maybe give it a 5% loss, stop loss, for the potential to make, about 14%. So almost 3-to-1 risk reward ratio. That's pretty good. So I like that one, and that one's looking good. Peloton, I bailed on this one. I actually cut this. I trimmed my stocks that actually looked. I needed to trim some of my positions on Thursday morning because I was leaving town. I wasn't going to be able to monitor them. So I found the ones that didn't look as weak, where the financials all looked very weak and the industrials looked all very weak. So I kept all those, but some of these tech stocks seemed to kind of hold strength. So I cut my Peloton short, and obviously that was the right move because on Friday, they pumped this thing up 5%. It's now broken this downtrend line right here on Peloton. So in the short, and Peloton also had bullish divergence down here. So I did point that out in the past, saying, look, it's got bullish divergence. It's likely, it's not the best short when you have bullish divergence. I was looking for a move down to, this support area and then going to potentially hold. They didn't even, the buyer stepped in early. So not a short on, this is not a short, but, again, I did point it out as a short right here at resistance, looking for a move down to the support about 99.50. We got a good part of that, and it just, it's now broken trend to the upside. So it's bullish in the short term, at least. Same with Snap. I cut this one. I cut this one a couple days ago because actually, I talked about this in my video back here where it had recovered and broken the trend line, and I wasn't really interested in being short now that it had broken this trend line. So we came back in for a back test, and we're continuing higher. Now I did talk about the potential for a false breakout or a bull trap, and I was interested in reshorting it if it broke back below this trend line and created that bull trap. So that's why I have this circled as a potential bull trap. We haven't gotten that yet, so no reason to reshort this thing. I'm just, I'm not in this one anymore. We have to just manage the trades that work, and the ones that don't work, you want to get out and cut your losses short. So cut your, small losses. So this one's not working, and no reason to be in it. Look at CAT. This is an industrial. It just shows the weakness that the money is coming out of the industrials and the financials, and it's kind of going into tech a little bit. That's really what I see. But let's see what the Fed does and see if the Fed, threatens to raise rates and tech starts to sell off. Because then at that point, we're gonna have a broad-based sell-off if that happens. Because we'll have weak tech, we're gonna have weak financials. There'll be no strength in the market for the most part. So look for that. If tech sells off at this moment in time, broad-based sell-off's coming. Here's CAT here, clear uptrend line right there. Negative divergence on the RSI and the PPO. You wait for a break or a sell signal. There it is, and it's just impulsive. I mean, that's impulsive selling, just straight down. All this money that had bought CAT long, really going all the way back to potentially going back to around February, mid-February or so. Many months worth of bullish money is now either underwater or break even on this. So impulsive selling, look at the volume coming in, and that's what we're seeing. So looking for this to continue lower. I'm not in this one. I've got some other industrials that I pointed out, but again, this is this is on a clear sell signal. Likely going to get a bounce sometime soon. We'll have to find those levels, but Yeah, probably down around this 200, 201 area, likely going to get some form of a bounce. Okay, and I'll wrap up with gold. I haven't covered gold for a while. So again, longer term, I'm bullish on gold, all right? And I talked about down here, this is gold bullion that we're looking at, but I talked about down here being a buy, you know, the area that I wanted to buy. This was my buy signal down here with the bullish divergence. And we had a nice rally off that low, that divergent low. That was a rally of 13% or so. So gold is now, looks like it's going to come in a little bit. We'll see how the day closes. But we have this uptrend line right here, and we're starting to break trend with a sell signal. So if that happens, I think gold's likely coming down to about 1790, 1800. This is my next area of buying, and I have it circled right here. So again, this is the area that I'm interested in rebuying gold, re-entering some of these miners. I have some core longer term mining positions I'm just going to ride out, but then I do size up when I get into buy areas. I do size up on the gold miners, and I overweight the gold miners when I come into buy, you know, into the key buying areas that I'm interested in buying, and then I take profit on the rallies. So that is what I'm looking to do, is to probably resize back up into some of these gold miners as we run down to this 1790, 1800. I see that as support. Now we could undercut it a little bit and just chop through it, but I think it'll hold. All right, this is the area I'm looking to hold. And the gold miners are likely going to do the same thing. Here's Barrick Gold. You can see it's downtrending. So Barrick Gold, you know, Barrick Gold has a major trend line all the way down here at about 1593, coming off the bull market low of 2015. And you can see we held support. We got 3 reactions, so we could drift sideways to down. I don't think we're going to get down that far, to be honest. So we're going to I'm going to watch gold bullion to start to set up into the buy zone and see where these miners are really trading at around that time. One that looks interesting to me right now that I bought last week is Anglo Gold Ashanti. So this is AU. Again, this one you have a trend line on the daily chart right here. You can see we, off 2018, we held support, and then we held support all through here. Now we're below it slightly, so, you know, maybe this is a sell signal. Maybe we're actually breaking down. But we also have this downtrend line right here from the 2020 area, and we had a nice breakout of that downtrend line, and to me it looks like we're coming in for a back test, and we should hold support kind of in this area. Now we could just trickle lower and kind of grind lower as gold works its way down to 1800, and then move higher. But I like this as an area of you know, an area to buy this one. So added a position here, looking for this to hold in this area and then start to move higher. All right, guys, long video, but I haven't put one out for a while, so leave me a thumbs up, check out the course, and I will catch you guys on the next video. Bye.